And we're live. Hello, everybody, and welcome to another episode of the Bearded Men of Real Estate Show. I'm Ray. Say hi, Dan.
Da 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 da. Da, 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 da,
You know, it reminds me. Yeah, it does remind me of the Muppet.
Yeah. Thank you.
If you're watching live, you could get Dan. He looks a lot like the Muppet today.
That's what I've been going for over the past year. I've been going for the whole animal from the Muppets look, and I'm getting there. I'm almost there.
Well, a lot of people don't know that you are a drummer.
Yes, I am. I'm in fact a drummer.
In the words of the infamous Gloria Estefan, the rhythm is going to get you unless you're a drummer. Well, thanks so much, everyone, for joining the show. I don't know if she had that last part, but I think it fits. Thanks, everyone, for joining the show. If you're watching us live on Facebook, we appreciate it. You could always chime in. If you're watching us on YouTube, you could especially chime in. All of the comments that we've had so far today are from YouTube. I love that. Mario Flores says, what's up? Producer Matt Clanton, also watching us on YouTube, says it's about time. I know we're a couple of minutes late today. Ryan Stevens says, yo, yo. Alan's in the house. He says, let's go. Now, the cool thing is, and the curious thing is, Alan and Ryan are also joining us on Clubhouse. And so they could actually chime in live on some of these articles a little later and give us their opinion. Melissa Mara says, rawr.
Nah, 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 nah.
Hey, Melissa. So thank you guys so much for joining us. Please share the show. You could also hit the bell and subscribe. If you're watching this after we record it and you're like, man, I know these guys are about to do like 3 minutes of intro, and I just want to skip that and get to the juicy stuff. Look down in the description, because every week we will post the timestamp and the articles that we're going to cover today. And we have some great articles to cover. We have a bill to help first-time home buyers. And check this out, guys. You could get $25,000.
Nice. Dude.
Is this a good thing or bad thing, though? We're going to have to talk about this objectively. We're also going to talk about foreclosures. They're on the rise. Wait, I thought that was a moratorium, Dan. There is a billionaire that says the housing bubble will burst, but this just isn't any billionaire making a prediction. He's been right in the past. So is it true? Or is it not true? We're going to talk about both sides of that argument. Plus, we'll talk about mortgage applications on the rebound. Housing inventory looks to be making a comeback. If you're a seller right now sitting on the fence, have you lost your chance to get a crazy good price for your home? We'll talk about that. Plus, CoStar is getting closer and closer to competing with the infamous Zillow that some of us love, some of us hate. And there's yet another lawsuit against Compass by a real estate brokerage. So they're piling on. If you joined us last week, there was also a lawsuit there. So we're going to talk about those, what's going on. But damn, first, before we get into all this stuff, would you please tell everyone what BMORE is actually all about?
You know, I would love to. Now, when Ray and I met here on the interwebs about 25 years ago,
yeah, it was a long time.
Right at the beginning,
it was just me, you, and Al Gore.
That was it. He was saving the planet, and he invented the internet.
Yeah.
And belts. I think he invented belts too back then. They did not exist before Al Gore. But, I had an idea for a show because I was bearded back then as well. Oh, geez, Ray.
Oh, no. What happened to your screen? So for those of you who don't know, Dan's camera resets on him every 30 minutes. And we've been able to hide that fairly well.
Yeah. But
I do it a story that, but not today. Dan's camera just shut off, which means we've been working behind the scenes for 30 minutes before this point. So
okay. Anyway, but Ray and I met 25 years ago. Let's call it here on the interwebs, and I had an idea for a show because I am in fact a bearded man of real estate. And when I met Ray, I noticed something very interesting about him.
Really? What's that, Daniel?
He's a very accomplished piano player.
So the long and short of this story is that I know a couple of songs pretty well, and I can sound like an accomplished pianist. I remember, so I went to college on a choir scholarship, actually. And in order to get the choir scholarship, I had to learn how to play piano. I didn't know how to play piano, and I would always just kind of pick it by ear. Okay. And so I learned like 2 songs that summer. It was only enough to get me in trouble. I could never really play piano. But I had the opportunity to play in one of these hotels with this grand entrance and everything. And so I sat down and I played the one song that I knew. And everyone was like, oh, yeah, play something else. I was like, guys, that's literally all I know.
I know it really well, but that's it.
So if you heard me in the hotel balcony, I am an accomplished pianist, but otherwise you'll know that I'm a picker.
accomplished at one song. But what I obviously noticed is he's a beautifully bearded man. But I noticed that he had a format for a show. It's the same layout we use today. But I also noticed that he loves giving value up front, not only to his clients but also to humans. So the show is about being more as an agent, but also being more as a human.
Yeah, one of the things that we think makes you more as a human is when you're able to give valuable information to your consumers who are relying on you. I cannot speak well today. Who are relying on you to guide them through the difficult transaction of selling and buying a home, especially these days in a weird and crazy market. There's a lot of professionals that may not be as professional, but if we can arm you with a couple of tools and resources and some real estate knowledge and information from the news headlines themselves and go just a little bit deeper in those headlines so that you actually know what in the world is going on, then we feel like you could share that with the other consumers and other people in our industry. And a well-informed industry is a more better run industry, I would say. So, and that's really what BMORE is all about. So
and that's why we started the show. We saw that there was an absence of this stuff, and we like pushing ourselves to be better agents. So we're hopeful that you guys get something out of this, and then it helps agents be more knowledgeable and therefore a little bit better out there for the clients that need us.
There you go. And right off the top, right before we get into these headlines, I do want to remind you that to subscribe to the YouTube channel, you'll also get the BMORE chops, which are just segments of each one of these articles. We'll cut those and then re-release them. So if you missed the whole show, that's an easy way to catch it. You can also, if you are joining us on Clubhouse, go up to the little green house that says Real Estate Networking. You can click that button and be sure that you follow the Real Estate Networking Club. And if you're following the club, you'll get notified of shows like this, unless there's an error like there is today. So today, for whatever reason, some of the Clubhouse rooms are not working correctly, and we've noticed a big drop off in participation in a lot of the rooms. And then when I ping people in, they haven't been able to join. So, but there, if you could see that the little green right at the top is the Real Estate Networking, I'll join that.
So is this a coincidence? I mean, Apple just had their new update. What, Monday, Tuesday?
It wasn't Apple's deal. And now Apple made an announcement yesterday that I was super excited about. Maybe if we have time, I can go into how this impacts real estate agents. But it wasn't Apple's fault. Facebook announced this Clubhouse Sherlock thing where Facebook is now going to be doing Clubhouse. Twitter is already doing this Clubhouse type thing. And for whatever reason, Clubhouse today seems to be having major issues, which does not look good for them on the face. So
that stinks because they started this cool new thing that a lot of people are getting into. They're working to get it over on Android. It's only on iPhone right now. And now all these big tech companies are essentially attacking them, to say they got there first when they didn't get there first.
Well, wow. Yeah, they're just adding, they're doing what Instagram did to Snapchat.
Yeah, with reels
and stories and all that stuff.
Yeah.
That's pretty much what they're going to do with everything that comes out now that is a social medium. So,
yeah.
We'll see what happens. I mean, they got to fix this kind of stuff before they let all the Droid users on, or else there's going to be mass pandemonium and crashes and all that kind of stuff.
Yeah, we're going to just ruin it. It's going to go horribly wrong.
Don't know, Dan is a Droid user for now, but maybe I can convert him. All right, so you ready to get into these headlines?
Absolutely.
Let's cover them.
And up to bat first is Ray Allen.
With Joe Biden here to follow him. A bill to help first-time home buyers. No, that would be so annoying. I can't do it the whole time. It'd just be
really annoying.
So consumers have closely been following President Joe Biden's proposal to first-time homebuyer tax credit, but the latest legislative effort to assist homebuyers differs in several significant ways. The newest draft of down payment assistance bill would provide $25,000.
Ray.
Yeah.
Keep reading, buddy.
$25,000 to first-time home buyers. Hey, that's still pretty good, right?
No. Keep going.
But only those who are first-generation home buyers and economically disadvantaged.
There it is.
Huh. So you mean to tell me that if my mom and dad just bought a house this last year,
you're out.
They've screwed me out of $25,000?
Yeah.
This is interesting.
So my first question, I'll let you get back to the article, but anyone watching on the YouTubes or listening on Clubhouse, I'd love to hear your input here, because my question is, like, my dad bought in 1974. Am I out? Is there any way to track that? What if the house
you're not a first generation home buyer?
Well, what if the house has been in the family since 1840? Like, how do they track that? Anyway, sorry, go on, Ray. We'll circle back.
This is very interesting. Are they going to go by ownership? Are they going to go by purchase? Are they going to go by how many years? Okay. So it's called the Down Payment Toward Equity Act of 2021. That's a great name for a bill. The proposed down payment assistance would be a means tested based on income and limited to those who have not owned a house for at least 3 years. But does that still mean, what about your parents owning a house? What's first generation? To qualify, neither of the borrower's parents may have owned a home.
Okay, so
what if they bought the home after I moved out? Because I grew up in a rental, and we had a trailer and then a rental. And I grew up in a rental. Once I moved out of the house, my parents built their dream home.
And then screwed you out of 25 grand today.
And if I hadn't bought a home yet, now that my parents own a home, that means that I'm no longer first generation. That qualification doesn't apply if the borrower's parents lost their home in foreclosure or due to short sale.
Oh my gosh. So, okay, but here's the other thing.
This part's cool that I agree with. Or if the borrower has been in foster care. Well, that's cool. But my parents would have to lose their house, go into foreclosure or short sale, and then I'm now newly eligible to receive $25,000.
Even though, okay, but here's my other thing is I didn't know the article said this, but it says either parent. So what if one of them bought before your parents got married, before you were even a thought?
Yeah.
Are you out?
Yeah. Or if they sold and now didn't own for years, you're out.
You're still out.
Or if your parents got divorced, right? But you live with mom as a rental, dad goes and buys a house, you're out.
You're out. And then, okay, what about this in your scenario, Ray? What if you got yourself ready? You bought a house before your parents. Are they out?
No, they could. They would technically be first generation if they're only looking at their parents. So they would still be in. They would still be in if they had not built their dream home.
Unless one of your grandparents bought.
Unless grandma and grandpa bought, which my grandparents did. So
how are they going to track that?
I don't. This is a mess already. Borrowers who make no more than 120% of the median income where they live, or if they a high cost area, 180% would qualify for a baseline of $20,000. Those recognized as socially disadvantaged because they are in a group that has been subject to racial or ethnic prejudice could receive an additional $5,000. The grant funding, which is not a tax credit, could be used at closing toward a down payment on a residential property with 1 to 4 units, including a condominium, corporate project, or manufactured housing unit. That would buy like half of a manufactured unit in some areas. Where's Christina M. Smallhorn?
She'll be here in a minute.
The program, which is currently being discussed to the House of Representatives, would dole out funds to states based on population, median income, racial disparities, and home ownership rates. So this is one of those government programs that gives the grant money to the states, and the states are responsible for tracking all that information and figuring out who gets it and who doesn't get it and all that stuff.
Then it'll probably go down to the local level and whatnot. But in theory, this is cool. But by the way, remember when they first started talking about this before Biden was even president, or maybe it was on his first 100 days list or something, but it was 10 grand or 15 grand. And now it's 20 or 25 grand. In theory, that's pretty rad, but there's a pretty big asterisk on this one.
There's a huge asterisk on it.
Was never mentioned before.
$8,000 tax credit. So those who do not have family members to guide them through applying for a mortgage are less likely to submit themselves to the process that is rife with fear and dread, quote unquote. That's what I got at the National Housing Conference at David Dworkin.
So it's looking to get them going, but to really.
And this is one of the things that they say, like, basically the illusion is that if your parents own a home, then you're well off enough to figure it out yourself. Yeah. So it says, I got the daddy down payment loan. My dad was proud to give it to me, said Dworkin. And he's the president of the National Housing Conference. I don't know. I would love to hear some opinions on this from the Clubhouse crew and from some of the people that are commenting on YouTube. Producer Matt says, "Hey Dad, would you mind foreclosing on your house real quick?"
Yeah, just foreclose real quick so I can then buy a house, and then you're good again because you're back to your first generation, so you're fine.
Yep. Melissa Mara says because applying for a home loan is so hard. Is it really that hard?
No, it's not at all.
Sean Nelson joining us from Facebook says, do we expect many more buyers with the monthly plus up payments starting soon? Off topic, kind of on topic. Plus up payments. What is that? Is that where somebody's refining the down payment in there, and so they have an additional monthly payment? Is that what you're talking about, Sean? Mario Flores says, seems good for people who may be economically disadvantaged and introduce those people to the real estate market with support, giving more opportunity to people who may have never could. Yeah, I think
that's that's a good angle to take on it. It's a good way to get there. You know, it's assuming quite a bit though. And I need to know what generation does it go? Is it just your parents? So if grandparents bought but parents didn't, you're good. Like how far does it go back? But it is a good way to get there. I think it's just going to, I'm always lagging. But it's a good way to get there. But it's interesting to see what does generation one mean? First generation. What does that mean?
Ronnie, this is a great point. Ronnie Long, CrossFitter and Realtor extraordinaire, says, let's complicate it. I'm adopted and grew up in rentals, but my biological parents are rich somewhere and own multiple homes.
Yeah. And I have a friend who's similar situation, literally owns his real dad literally owns an island and hotels on that island, but he's adopted. So,
all right. So I'd love to hear some thoughts. I know Ryan is up there. Ryan, do you have any thoughts on this in particular? I'm going to go to the Clubhouse folks. Ryan, what do you think about this, man? Ryan's not here. All right. So Alan, I know you're up on stage. What do you think about this, man?
I mean, definitely funny. I love the twist you guys put on it. And I mean, this is the first time I'm listening into the podcast. It's actually my first day on Clubhouse in general. No real input. It's crazy. I mean, it's just so many obscure things that come in, and I guess you have to take everything with a grain of salt and sort of like look at why the law is the way it is. And there's people that sit down for hours upon hours making this stuff up. Doesn't come out of the blue, but very interesting. Not too much to say on this topic, but definitely some articles later on that I'll chime in on more. And yeah.
Ooh, what a tease! What a tease! Thanks, Alan. All right, Jan, I'm trying to bring you up, man. You have to. I know Clubhouse is lagging a little bit, so tell me if you don't get that. You get Eureka. Do you have anything to add to this? I mean, I like the idea that it's supposed to help those that are economically disadvantaged.
Yeah,
that's great. But this is really interesting to me. Is like what's it going to do for the housing market as a whole? Is it going to impact those in the lower third of the market? Because chances are, a first-time home buyer, they're not buying in the mid-market or luxury. So, well, I mean, that would be also interesting. But if they have the income, if they say you can't make more than 120% of the median income,
180% in the higher,
180% in the higher, maybe like in the Silicon Valley area, then what is that going to do for the housing market in those locations? It'll further constrain some inventories, right?
I mean, that's almost double though. 80% higher than the median income. That's a good chunk. I mean, so that'd be interesting to see what it does in those areas. And then does 25 grand help in those areas?
Right. Glenn Fernando chimes in on Alan and says, first time listener, first time caller. Love it. All right. Who is it?
I promise I'm at work right now, guys. So like I have my own office, but I have you guys on. I was caught up in something, but I'll be more attentive. I'll be a good contributor. Good. I promise.
You're good. Oh, speaking of Be More Contributors, we actually have a group on Facebook called Be More Contributors. And if you are not in that group, you should join that group. We every now and then we'll discuss some of what's happening on the market. We'll discuss some of these articles. And so if you can, just look up BMORE space contributors with an exclamation point, because we were excited when we made the group.
We were really excited.
Dan, they're calling your Wi-Fi socialist. Does that mean you're sharing it and getting it off of your neighbor?
It actually does, yeah. I'm a big Bernie fan, so that figured.
There you go.
Hey, the
right,
Wi-Fi password wasn't that hard to figure out, but.
Jan, I'm trying to send you the invite to come on up because I see that your hand's raised, but it's just not working. So you may have to leave the room. Oh, you are. He's up. All right. Let me see. He wanted to comment on this specifically. Jan, what do you have to say, man?
Yes, I've had a spotty connection, so thank you for having me up here. So yeah, I wanted to add a point because I come from a mortgage background, so I kind of seen how this program or programs like this could help. I think despite all this negativity or like the fact that okay it may uh, push them into owning a home, whereas in the future they may not be afforded. I think overall it has helped them because, like you said, they wouldn't be able to afford it. Like if their income is good enough to qualify, the down payment assistance programs. If and I may not have heard the question completely, but correct me if I'm wrong. I think the question was if those down payment assistance programs or the grants or zero down programs are good or not. Is that the question?
Yeah, kind of. We're talking about this one specifically that requires you to be a first generation home purchaser. Like your parents can't own a home. So I agree with you in general. What I think you're saying is, John, like these down payment assistance programs and things, those are great. However, I think there may be too many restrictions on this one that kind of complicate the issue. And that's my only problem with it. It's like I love the down payment assistance program. I love giving those that are maybe economically disadvantaged some extra boost to come into homeownership because I think it does lead to wealth. And that's been proven year after year after year when they've done the studies that the pathway to home ownership generally leads to wealth and generational wealth. So that's good. But I think there's other ways that they could have targeted this, maybe just based on income, maybe just based on where someone is in the process in their own life without having a bearing on what happens to mom and dad. Because you're going to get into a lot of issues where you have kids that have been basically disowned by their parents, but not formally. They've never been in foster care. They've never gone through the adoption process. They've never been quote unquote disowned, but yet their parents own property. So now what? Because they've been on their own since they were 14. And so those are the types of people that I think should also be able to take advantage of this. What about first generation Americans and people that are here for the first time, that their parents own property in Mexico or own property in Europe? Can they take advantage of this, or are they going to somehow look at what mom and dad did in another country, but that's not helping them here? So I don't know. It seems convoluted, and I think they could have simplified a lot of it to make it more effective. What do you say, Jan?
I totally agree. I'm not a huge fan of all these restrictions. I keep ranting. Being from California and all this madness that is going out here with all these moratoriums and everything, and the nightmares that we're going through with our with my clients. They call me. I hear some horror stories. And maybe a little bit off topic, but it's I thought I can rant a little bit. They have this stupid moratorium now in place, and you have these tenants. I mean, there are some that are impacted, and rightfully so, but there is a good portion that they are not impacted. They just decided not to pay rent, and because of all this kind of one size fit all rules that sort of is for one class and excludes the other, you will see so much injustice that is going on. Like I have these clients that, like one of my clients, she's a lady, she's an old lady. All her income is from that rental property she has, and her tenants are not just paying, and she can't do anything. And then they have this state assistance program, and that only applies if the tenant is cooperative and proves her income or his income has been reduced due to COVID. So she's saying it's reduced, the tenant, but then she's not willing to provide any documentation. So first of all, she's not paying rent. The landlord cannot do anything. Thirdly, she cannot get any help from the state either because she cannot prove documentation. The tenant cannot. So things like this, when they introduce something with some benefits to just one group and exclude the other, I see a lot of negativity coming out of it. So down payment assistance programs, if it's just for everyone, I totally agree. But when they just choose a specific group, I'm not a huge fan of it. And it is coming from someone in California with all these liberal rules, and I'm fine with it. But it's just sometimes getting too much. So that's my 2 cents.
Well, remember, our last governor wasn't liberal. Just FYI. So some of those rules in place aren't just liberal. But anyway.
All right, D. Jones has a good point.
Too, so I know how California works, but I do have a listing right now with a tenant in it that just will not cooperate, won't do pictures, won't do anything. So I get it. I totally get that.
D. Jones brings up a good point. She says the problem is the sellers aren't accepting those offers with grants. That's a great point.
Yeah. So here's what I do like. I mean, I like a lot of things about it. In theory, it's good, but I like that they're giving the grants to the state level. You know, it's not the government, because that's a really broad stroke of the brush, but they give it to the state, and then hopefully it goes down to the local, the city level, and then they can decide, you know, hopefully kind of what you were saying, Ray. And was it Jan?
Yeah.
It'll go more individual based, and then they can make their case by case basis, not so just umbrella and not so blankety. I hope it kind of goes out.
$25,000 is a lot. We'll see kind of how that works. And is it just for down payment, or can they use that for the appraisal gap? Ooh. Anyway, speaking of moratoriums, Dan, you are a little bit blurry, so make sure you don't have anything running in the background. But do you want to go ahead and cover the next story?
Yeah, I don't have anything. I never have anything running in the background.
Interesting.
I know. I can't wait for Matt to tell me how to do technology stuff.
Yes, just for context, guys. Last week, Dan was also having a little bit of issues with it. And so Matt was sending him messages like, hey, here's how to reset your router and what to do and all this stuff. So Dan used to make video games. So right. he's pretty technologically oriented. But it was great, though, because I love that Matt took it upon himself to be like, let me help this guy.
Yeah. And it's just because he's a caring kid and we're messing with him a little bit. But I mean,
old man Dan and his wife, right?
Too. I'm 47, so I get it. You know what I mean? Like, I totally get it. The D says you can use the grant for closing and down payment only, so no gap.
Okay, you could use the grant for closing, down payment only. So you got to use your own money for that appraisal gap.
Yeah. So,
all right, go ahead.
Despite the moratorium, foreclosure activity is on a steep incline. So is that a good or a bad thing? And if it is a good thing, how could that be? Some housing analysts have grown concerned about what will happen to the real estate market when temporary foreclosure moratoriums are lifted. Will it spark a wave of new foreclosures and lead to a crisis? Already, foreclosure activity is on the rise. Even though the moratoriums are still in place and the government has relaxed requirements for mortgage forbearance due to the Rona, foreclosure filings in March rose 5%, which is kind of a big jump. And that is compared to the previous month, according to Adam Data Solution. But that slight uptick could be a good thing, analysts note. This is a quote. The foreclosure moratorium on government-backed loans has virtually stopped foreclosure activity over the past year, says Rick Sharga. He is the executive vice president of Realty Track, which is an Adam Data Solutions company. He goes on to say, but mortgage servicers have been able to begin the foreclosure action on vacant and abandoned properties, which benefits neighborhoods and communities. Right? That's a positive. So it's likely that these foreclosures are causing that slight uptick we've seen over the past few months. Homeowners with federally backed loans could receive up to 18 months of forbearance, but those who receive such assistance at the beginning of the Rona could see those protections lift after September. The Consumer Financial Protection Bureau estimates that could put about 1.7 million homeowners at risk of losing their homes. This is a quote. There is a tidal wave of distressed homeowners who will need help. CFPB Acting Director Dave Ueho, sorry if I butchered your last name, he said in a recent statement. But high home prices and growing homeowner equity likely will prevent another foreclosure crisis. That's the point right there. We've said that on the show over and over again. But high home prices and growing homeowner equity will likely prevent another foreclosure crisis, housing experts say. Also, a historic, which Clayton said earlier in our chat, a historic housing shortage will keep demand for homes high. For homeowners who are unable to make those payments, they could sell and potentially for a high profit. So, again, I think we've been saying this stuff on the show for a while, and I think that's where we stand.
Yeah. I'm wondering if the number of homes that are being foreclosed on is going to have an impact on that bottom end supply, and if it will even be enough or drop in the bucket.
But
Because
anything would help, right? I mean, so and
yeah,
technically those foreclosures they'd have to be the boarded up, the beat up, the 5 out of 10, the 4s out of 10s to come on the market to really help that bottom end of the supply. But and so two parts to that is a flipper going to buy that? Is an investor going to buy that and flip it? And how does that help a market? And then other than bring another high price home on the market once it's all done, or are there going to be affordable houses come on the market? Because I see it as a positive thing when they're speaking of, the vacant properties and the abandoned properties.
yeah. There is an article that was out that we're not covering today that just talked about how buyers were looking more into homes that needed work, that they weren't so focused on homes that are just, perfect. And we went through a phase. We were doing the show when we started going through this phase where it seemed like the home buyers were changing and they were getting so picky about all of these houses, and that they were, they would put a home under contract and at the slightest, wrong thing during the inspection, they were bailing. And they're not so much anymore. And it has taken them about a year for buyers to be like, okay, well, I get it now. I'm going to have to do some of this stuff myself. But I think now they're even turning to, fixer uppers. I've had several buyers that were looking for new properties or newer looking properties on the market, remodels. And they said, well, you know what? We'll take the one with the green shag carpet that smells like cat pee, and we will do this ourselves.
Yeah.
And so I'm also seeing that in my own business. Clayton Fernando Estrems chimes in. He says, NAR said we need 2.7 million homes to get to 6-month inventory. Wow. Yeah, that was Lawrence Yoon.
Yeah, and that's a ways out. I mean, that's a lot. So hopefully this would help generate that. And these homes are just sitting vacant, hurting these neighborhoods anyway. So, I love the positive spin they put on it. It's not just all gloom and doom. The big thing is that what did it say? 1.7 million homeowners could be affected by this. So we'll have to see what happens there.
D Jones says she's been trying to do 203K loans. Yeah, that's the FHA loan with the construction stuff on top of that.
Yeah, and that would help too, because I have noticed the exact same thing, right? All of a sudden, that 8, 9, and 10, kind of the really done house. All of a sudden, I'm okay with the 6. If grandma smoked in there for 50 years, I'll just rip all the wallpaper off, take out the carpet, repaint it. I'll be fine, and all of a sudden that's opening up. And all the other side of it is that when you're actually in escrow, all of a sudden, like before, if there's a hole between the garage and the house, which would be a possible fire hazard, all of a sudden that's okay now.
Yeah. You don't have to have a
roofing shingle is okay now. It's a lot of loosening up, and I think they have to do that because of the market.
Yeah. Well, and speaking of, let's talk about a bust. So there's a real estate investor who shorted the subprime mortgages back in the day when that was a big deal. Now he's a billionaire. He may have been a billionaire back then too. But
that's the question I had. Was he billionaire before or after he bet against the market?
When did he make this money? But he says that the housing boom is in a bubble, and that bubble is about to bust. So his name is Jeff Green with an E, Greene. He said, absolutely. I think we're in an omni bubble. How long does it last? It depends. How long do you keep the faucet open and this money running? To further quote him, he said, there's just so much money in corporate balance sheets and people's balance sheets, and their bank accounts are just, it's just driven prices of everything higher. But at some point, it has to stop. So this is what he's talking about. In the interview with Power Lunch, he said that 80% of the extraordinary increase in the home prices and what's going on in the housing market is because of liquidity in the economy, meaning people had access to money. They had access to money either in their bank or they could relatively quickly get it out of their house. 20% is because of fundamentals, is what he said. So they point out the rising costs for lumber and significant inflation, and that would slow down the economy in the future. He says, when you see prices go up the way they've gone up, you have to ask yourself, why did this happen? I'm going to find another one. Okay. He says, I think we're going to have inflation that no one is forecasting whatsoever. And it's going to have to lead to much higher interest rates that will be going to slow down all these markets.
Okay.
All right. So let's dissect that a little bit. So the Fed has a two-part job. They have to decrease inflation or keep keep standard inflation, right? And at the same time, maintain full employment. And those are the two things that the Fed watches. And as we approach full employment, that means more people are working and they're getting more money. And if they keep the rates low, then banks are encouraged to give more money to people, and people are making more money because we're all fully employed. And so what do we do with the money? We go buy stuff, which is great, right? Except when producers can't keep up with demand. What is a producer going to do if they can only produce 10 widgets and they're sold out as soon as they announce, hey, we got 10 more widgets, boom, sold out.
Right.
So they're going to try to increase production, but until they can increase production, they increase prices. They increase prices to further tamp down demand, make more money per widget or per stick of wood, as lumber goes. And then you have inflation. That's literally the rising prices due to the rates being low and full employment in America. So what the Fed has to do then is raise the rate so that banks are no longer encouraged to put so much money out in the economy, but instead they start to loan money overnight to themselves and they make more money that way. And it decreases the amount of money in circulation. And suddenly those prices start to slow. Like we'll see the headlines that say home price gains slow. And that's what we were seeing a couple of years ago as well. And the rates will have to increase and increase and increase until production can catch up. So that's kind of what he's referring to here. And he thinks it's going to be a bust, which means it's going to happen very quickly. A lot of other people think it's going to be very gradual and that this boom is different. And the article says that the reason why the boom is different is because all the mortgage underwriting standards have been improved because of the previous crash and everything we've learned from there.
Right.
This Coldwell Banker real estate CEO Ryan Gorman told CNBC, I know there's a lot of concern about a potential speculation out there, but it's really not what's happening in the market today. He said approximately 40% are upsizing, the most classic reason why people are looking to move. About 30% are seeing an increase in value in their home, so they're saying, maybe I want to monetize that value, perhaps move forward in my retirement plans. You see about 30% that are saying, if I'm able to work remotely at least part of the time, maybe all of the time, then perhaps I want to live somewhere differently than where I live today, maybe even in somewhere more affordable. So Gorman goes on to say, while home prices are increasing, affordability is a relative term, and we're seeing that some people are taking advantage of that. All right, Dan. So that was the long and short of it. Where do you stand? Do you think we will see a bubble burst or bust, or do you think it's going to be a slow, gradual change over time because the money is different now and people are managing it differently, including banks?
Yeah, I mean, I agree with that last part. They're managing it differently. I don't think a bubble can burst like it did 15 years ago, 12 years ago, whatever that is. I don't think it can. I just, a lot of people getting foreclosed on because of the Rona can, we've said it on the show multiple times, so I hate to repeat myself, but the foreclosures, just like the last article we just went through, Ray, that, the abandoned and the foreclosed on homes that are just sitting there, the vacant homes, it coming onto the market would only help, because of low supply, would only help get more supply out there, which we're in my market, we're about 5.5 months behind on. It would only help. So I don't think, and potentially those things would come on the market at a lower price, which would then keep it from, booming like crazy, like it is right now. But I think it's really easy to say, well, prices are going up, so there's going to be a crash. It's really easy to say that. And maybe this billionaire is not feeling relevant right now like he was 15 years ago.
It's all about it. It's all about his clout.
Yeah, I mean, by the way, dude does not need clout. He's got 3 commas. Like, he doesn't need clout at all. So I don't know why, because as you were reading everything he said, there was no like, here's why it's gonna burst. He's just saying things that we've all been talking about, but there's no here's why it's gonna burst. And then the counterpoint that I forget who else it was in the article.
CEO of Coldwell Banker.
Yeah, I think I think it has to be a correction. Interest rate go up. Unemployment, by the way, I just looked it up. It's at 6.2% nationally. So we're right in that ballpark of full employment, and interest rates can go up a little bit. We can still handle it. home prices come down a little bit. I just think it's more of a correction. Even if they corrected by 10%, that's 50 grand on a $500,000 house. Still not a crash. Still not a foreclosure crisis. Still not a, flooding into the market of all the shadow inventory. So I don't see it happening. I just don't.
Yeah. All right. So I want to go to Clubhouse. I want to go to some of the commenters that we have. D Jones
That's
says,
a good one right there.
Speaking of long and short, she says, what does Michael Burry predict? LOL.
If you don't know who he is, he's the subject of The Big Short that came out 6-7 years ago. Really good movie.
The thing that made me feel better about my real estate career through 07 through 09. So Ryan Stevens says construction loan is a great option if you're savvy. Yeah, that's good. Mario Flores says, yep, literally we have checks and balances, aka strict standards to prevent 08 from happening again.
Yeah, and remember how many times on the show, like since we've the inception of the show, which is, I think we're on 4 years now. But Ray and I have known each other since back in the Al Gore days. But we've been saying, they're going to loosen up loan standards, and they have, but not kind of what we thought. Remember in 2017, 18, it was like, dude, there was a lot of articles. I'd say one every other month or something saying, here comes the no income verification, no down payment loan. Here it comes again. Here it comes. And we haven't even heard about that. And I would say, honestly, 1.5 years, 2 years, right?
No doc stated income loans, man.
The liar loans. And they're essentially, it's not even a thing. And they might be out there, but it's not going to run rampant like it did 20 years ago to lead to what it did. So I don't see it happening, and they are loosening things. But remember with the Rona, lenders were so busy, they were tightening back up again. Like, we need less business right now so we can catch up on our backlog. So they have to loosen up. And then, I don't see it happening.
All right, I'm going to go to Clubhouse, get some of the comments in. So let me bring them up there. First, I'm going to go to Mark. Then I'll go to Alan. I saw you flash your mic. And then Jeff, I know he jumped up here for this. But if you're already on stage and you want to comment about what's kind of going on in the economy, if you think it's going to be a bust, or if you think the bubble won't bust and there is no bubble, I want to hear it. So Mark, I'm going to come to you first, man. Are you there?
What's up, y'all? I am on the beach in Cancun, so I don't know how bad the wind is, but I absolutely despise Adam data, and that's why it came up. I think we're currently in the 7th most affordable housing market of all time, and I'm on the lending side. I wish we had more inventory, so bring on some of these foreclosures. We need it. But with all that being said, I don't see a crash anywhere near the horizon. And a correction, I think, can only be a good thing for us overall. And bring back the 3% appreciation, because this 9 to 12 to 18 in some of these markets is just outrageous and unsustainable. So that's my 2 cents.
Nice, says Mark from the beach in Cancun. So that was great, man. Thanks for chiming in.
And that by the way, how cool is that we can bring you that live first of all, this is a live podcast, and we have people from all over the globe on vacation commenting because we brought up Adam Data Solutions. But I want to know his affinity against Adam Data Solutions. We'll save that.
We'll have to dig into that sometime. Okay, Alan, what's your comment on this? Are we in a bubble? Is this thing going to bust? What's going on?
Hey guys, so I think we are 100% in the bubble, and we're in a bubble with the stock market as well. We have the forbearances going on, foreclosures are being delayed, and just as it says in the article, we have to ask ourselves, why are the prices rising? Well, number one, I do agree with low inventory. That's obvious. As inventory goes down, prices will rise. But the biggest issue to me is that although we are reaching, higher employment, and again, a big part of this does also rely on, how we deal with COVID going further, if there's going to be, more variants that come and hit the states. But essentially, we're bandaging, a pretty big wound at this point, and we just keep flooding the economy with, more stimulus checks, PUA, and I know all of that is going down now, which is great. But my concern is that, a few months ago, there were people who were possibly not in the financial situation to buy a home, but the government put them in one. And my question is when the government pulls their hand back, because eventually we're going to have to slow down the spending. We're going to, or we're going to have to get the money through taxes and other things like that. Will those people still be secure enough to maintain their mortgages? And the next problem is from an investor standpoint, the cost of lumber and just the cost it takes to build a home. Foreclosure prices, even at auction, although they aren't happening as much right now, when they do come back, they're projected to be around 20% higher than the normal foreclosure median sale price back when the courts were open. And for investors, that makes it super hard to find lucrative deals you're willing to build. A lot of investors that I work with right now, they're fine with investing in fixed income properties where they know how much they're making with stable tenants. But the second they hear troubled tenants or foreclosure, they're running away right now. It's just not a safe place for them to put their money. And it's got to happen soon. I don't know when it'll happen, but everything's got to crash. The stock market and the housing market needs a healthy correction. I wouldn't call it a crash. It's got to be corrected.
So Alan bringing the sunshine and lollipops to us today. No kidding.
Okay. All great points. But again, he said correction, not crash.
Yeah, correction.
Even though we're in a bubble, it's a steel bubble that's not going to pop.
Yeah. So
it's going to slowly deflate because there's a tiny hole in it.
So the funny thing about the correction, we know that a correction is a 10% change, right? So a correction would be a downturn of 10%, probably not going to be detrimental to the economy. You're going to see maybe a couple of layoffs and stuff, but at already 6.2% employment, there probably won't be much of that either. So I could definitely see that happening. So not really a bubble busting, but I think that would also be kind of a slowdown. But if it all happens at the same time, it might be a bubble busting. And then you have everyone running to Bitcoin or Dogecoin, I guess.
Yeah, fear spreads quickly.
Fear spreads quickly. Good.
And that's why we're here to break down the headlines so it doesn't. By the way, I'll come back to me, Rick, because I found a recent article about Michael Burry.
Okay. Let me get to Jeff. Hey, man, Jeff Fargo, thanks for joining the show. What do you have to say about this? Are we in a bubble or are we not?
I think that we are not. I think that we're going to see obviously a correction. I'm a data guy, like most men. Look at Pornhub and YouPorn, and I like Microsoft Excel spreadsheets and Google Sheets. Those are my jams. And everything that I'm seeing is there's going to be a correction. I'm in Vegas, and we've got about, give or take, 260 to 265,000 single family residential units here. And I built an algorithm regarding forbearance and addresses, homes likely to, to be going into forbearance within the next 12 months or so, as after the whole thing gets lifted, which it is going to. There's just no way it can continue. And I came up with about 44,000 homes out of 260. So I just, there's going to be a correction. There's stuff that's going to happen. We are all in a business, whether you're in title, escrow, lending, you're a realtor, is the ebb and flow of what we do. However, people are always going to be looking for a home. And I think that the beauty of this platform is, instead of looking at it nationally, we can also really get idiosyncratically focused on the microeconomies of where we live. I really don't like to look at national data. I'd rather be looking at Clark County, Nevada, or Las Vegas data. Is this stuff I pull? And to whoever before said about Adam data is absolute crap. And that's, you need to peel back the layers, because there's people out there that get good data, and then there's stuff that just is not good. And so I would highly recommend that whenever you're hearing somebody speak, question the source and question who they're sourcing their information from. Because now with the internet, you can look up anything on anybody.
Phenomenal. And that's a great point, and exactly why we have the show. We love to question everything, especially the headlines, when they're like, oh, this is terrible. And then we break into the headlines and it's actually not any bad at all. So
it actually seems really good.
Yep. But that's a great point, Jeff. Looking at the micro economy instead of just the macro economy, understanding what's going on nationally, but then digging down deep and seeing what's going on in your own backyard. Just one quick point about it, though. Just because a lot of people may be going into forbearance doesn't necessarily lead to foreclosure. You know, the article that we covered, I think it was last week, really stressed and emphasized that mortgage servicers were going to be forced by the government to foreclose as a last ditch effort to go through all the process of refinancing, adding back to the back of the mortgage, coming up with a different payment plan for the portion that was forbeared. So just because there's some in forbearance doesn't necessarily equal foreclosure. And I'm anxious to see how many people come out of forbearance into foreclosure. Because if they are truly in forbearance, they just haven't been making their payments. There's a good chance they have a ton of equity in their home. And instead of going into foreclosure, they might just sell, which that would be a great, the algorithm and database that Jeff has created is going to be great for him as a real estate agent to reach out to those folks with equity and say, hey, now may be a great time to sell.
If you have equity and you're in forbearance, I mean, you might need to sell your home. But again, that would just help relieve some of the stress that's on the market right now, as far as not having enough sellers go.
Yep.
I just as a quick follow up, I'm sorry, is that I'm not a realtor. I'm just a title rep, and I'm just a data guy that provides value to my agents here in Vegas. But I also think that compounded with herd mentality of the vaccine is going to release some inventory into the market. I would say probably Q3 of this year is also going to help.
There you go. Well, thanks, Jeff. Thanks for the contribution, man.
And we also have to remember too, if unemployment were at 10%, 12%, maybe some big concerns about what those forbearances turn into. By the way, if you haven't seen our commercial, go over to our YouTube page, look up Have You Been Foreburned? It's an amazing commercial that we did.
Foreburned is an amazing commercial that we did live, and then we converted it into an actual commercial. So it's pretty fun.
So
it had to do with all those people that would just call the bank and ask them, and then they were put into forbearance.
Yeah, you got foreburned. But anyway, but we digress. But if unemployment were so, but it's at 6.2. And again, we're not trying to discount, anyone who is unemployed currently, but that's a national, almost full employment rate, right? Ray? So the two kind of suggest that forbearance, the jobs have been gotten back, they're back to work again. Either they're working remotely or back in the shop that they work in, and they're back and they can do they can get back to their payments again.
There you go. I know we got a couple more articles to cover in just a very short time to do it, but I want to get to Ryan Bokro's comment. He said that comment, it might be the most affordable time we see in the housing market to come for some time. It's interesting thought. I said something similar to a client the other day. And then he goes on to say that the correction, though, is likely just get us back to more normal supply demand ratio. I don't think that we'll see a flood of the market with so much inventory that we see in a buyer's market. So basically becoming a neutral market. That's kind of
how I think.
Hope price gains slow. That's the headline I think we're looking for.
Right. Extreme buyer's market. Like that's the headline I think we're going to see. Yeah. But, by the way, real quick, I did find an article. It's from businessinsider.com. Big short investor Michael Burry deletes his Twitter profile after warning of market bubbles for months. Burry has warned against bubbles in stocks, cryptocurrencies, and other assets this year. The big short investor swore off tweeting in March after SEC officials visited him. So maybe watch what that dude's doing.
Yeah, but now you can't see it. He was warning everybody, and now he's not.
Yeah, but is he a canary in the coal mine, Ray? All right, moving on.
Or is he the coal mine? Okay. So I don't know what that means, but it was.
Can you be the? I don't get that one. Ready? Mortgage applications rebound following a drop in rates, and this is they dropped, but not by a huge amount. So this, these applications, and they weren't only driven by refis. So it's pretty rate sensitive right now. But after 6 consecutive weeks of dips, mortgage applications rose 8.6% in the latest report from Mortgage Bankers Associations, who got their info from Adam Data, by the way. Just kidding, guys. The jump in applications can be traced to mortgage rates falling to the lowest levels in 2 months, prompting a small resurgence in refinance activity, said Joel Kahn, who is the MBA Associate Vice President of Economic and Industry Forecasting. He is quoted as saying, borrowers acted on the decrease in rates for most loan types, with both conventional and government refinancing applications showing gains. The spring housing market also saw a boost from lower rates, with purchase applications driven by a jump in conventional applications increasing over 5%. Khan added that the MBA expects the MBA, not the NBA. They don't predict anything in the housing. The Mortgage Bankers Association expects the purchase market to remain strong due to the recovering job market, vaccination rollout, and supportive demographics, which will combine to fuel housing demand in the months ahead. The refinance, and here's some kind of final numbers on it. The refinance index also increased up 10% from the previous week. The unadjusted purchase index increased 7% compared to the previous week. That's a big jump kind of now, right now, and with what we're doing with interest rates. That's a big jump week over week. And again, purchase index was up 57% higher than the same week 1 year ago. That's huge.
So we're still 57% up on purchase activity, but we've been warning, or saying, not warning because I don't want to get tracked by the SEC, but we've been saying,
Right.
or as producer Matt put in the comments, the FBI's after him, the federal bubble investigators. But we have been saying for a couple of weeks now that if you remember what happened last year is that there was basically a U. And for those of you who have been in the real estate industry a long time, remember consulting with people at the end of 2014, 2012, and you would draw the U on the piece of paper and say, you guys bought at the top here, and then we went way down, and now you're back over here. So that is kind of what happened to showings and contracts written during this time of year last year. It was like a big U from March-ish all the way up until April or May. So if you go look at the data,
It's gotta be May.
It's gonna be May, so you'll see that. So in this current scenario, it's difficult for us to tell if the mortgage purchase activity being up 57% is actually a big deal or not, because no one has been looking back 2 years, which I would commend someone to do. Go back 2 years and compare those numbers.
Yeah, Adam Data, what are you doing? Go back 2 years, bros.
That's when no one likes you, Adam.
Yeah, you won't even go back 2 years, dude. Come on.
All right. So that's good. Let's just get straight to the next article too. CoStar inches further. Oh wait, no, sorry. Housing market inventory. So this is my article. I was about to read yours. Housing market inventory is starting to recover. Yay! Pop confetti, celebration, crowd cheer. Housing starts jumped in March, recovering from a bleak February that included wild winter storms in the South, according to a recent report. Speaking of, it is really cold here right now in the spring. The census
Dude, it's not even going to hit 60 today, and it was 80s last week. That's crazy. It may rain later this week. That's crazy.
That's right. So single-family housing starts rose 15.3% over the month to a pace of 1.24 million annualized units. That's great. That's 37% up from a year ago, which remember, we were kind of in a U. They had stopped kind of building a little bit. Housing starts at the very beginning of 2020. If I remember correct, we're up 13%. So this is definitely headed in the right direction. The March pace was the second strongest since 2006, surpassed only by the past December's reading, Duncan said. And that is Doug Duncan. He's a chief economist at Fannie Mae.
I love that name, Doug Duncan.
Doug Duncan. An extremely tight supply of existing homes for sale, combined with still affordable to manage rates and improving labor market, will continue to support the demand for new housing. Suburban family housing construction is also benefiting from this trend. Let's see. Demand is expected to remain strong. We expect it to diminish somewhat as the year progresses due to the waning effect of the pandemic. Oh man, I was trying not to say it, but I said the Rona on homebuyers timelines. So you guys can see more of that article on Housing Wire. But good headline, a good substance to the article, and it looks like inventory may be starting to recover a little bit. So does this mean that people that are looking to sell their home right now are too late, Dan?
No.
Have they missed their opportunity to get a crazy price for their home for sale?
No. I mean, we're up. I don't even know. It's going up 10% and then another 10%. We're up crazy. So it could slow down quite a bit and they'd still be up 7% compared to a year ago. Like, I think they're fine. But if you need that crazy price because you have that high loan balance, then maybe now's the time to consider that.
There you go. All right, well, let's talk CoStar and then Compass, and then we'll wrap the show.
I'm going to kind of brush through this one. I can go into a little more detail if you want. Ray, we can kind of make that discussion, but I just want to kind of, if there is any feedback on this, but CoStar inches further into the residential market, which we've covered pretty much every move they've made. They bought some rental sites. They tried to buy, there was a failed purchase. I think they tried to buy something last year and it didn't go through. But if you want to see this one, this is at magazine.com or .realtor.daily news. So over at realtor.com. But as we report on the show, commercial real estate giant CoStar is taking a bigger interest in the residential market, and its latest buy gives the company access to more real estate data to do that. They have purchased Atom Data Solutions. I'm just kidding. I can't. Just kidding. The CoStar Group announced this week that it has reached an agreement to buy homes.com, which is a residential property listing site, in an all-cash transaction for, by the way, I think this is a great deal, because what did Zillow pay? $500 million for showing time?
Yeah.
And I mean, they provide a lot of
offered. I don't think that's closed yet, but that's what they
right.
offered.
Okay, yeah, very true. But that's a lot of money. And CoStar has bought homes.com for all cash. Again, offer. It's not closed yet. $156 million. That
sounds
reasonable.
Good. That sounds good.
Now, they're a smaller player. They're not as big as the Zillow and the True and the Redfin, but they have 5 million visitors per month, which is pretty legit. And they search, it's nearly 1.8 million residential property listings. Homes.com also supports more than 500,000 residential agents and brokers in the home sales process.
And they are diligent to call me every month.
Yes. And they so they plan to combine homes.com with another one of its recent purchases, HomeSnap, which is a marketing platform for residential real estate. So they're doing everything they can. Now I'll just finish this again. If you want, go over to realtormagazine.com or realtor.com. But the homes.com acquisition is largely expected to close in the first half of 2021. And then that will join their other, they have, CoStar also has HomeSnap, apartments.com, apartment finder for rent, apartment living, and they have a bunch more. They have a bunch of websites that they already own. So they're pulling quite a bit of data. Now, a lot of it is from the rental side of things, but they're getting bigger and bigger. So the biggest question is, are they really? Because it does say, let me hit that where I wanted to see. Andrew Florence, who is the founder and CEO of CoStar, he says, our plan in bringing HomeSnap and Homes.com together is to help agents market their listings in support of his words, your listing, your lead philosophy, which stands in contrast to most big players in the industry. So, A, do we trust that? And B, do we think they can pull this off? I mean, they're making these strides, big strides.
Important comment from James Festini, who says, my favorite show. Thanks, James, for joining and commenting. Mario Flores says, CoStar tried to buy a data company, but it didn't happen. I remember that happening, where they tried to buy one, it didn't happen, so they kind of bought a different one or made it their own. They did buy HomeSnap, which is big news for anyone that is a real estate agent that uses HomeSnap. I think that app will only get better. I haven't used it in a little while, so I need to kind of go back and check it out and see what the acquisition has done to the data. And now they're buying homes.com, who, like I said, has been very, very diligent in calling me every month and seeing if I want to buy some leads on there. So they're making strides to compete with the big Zillow, which no one has really done. Realtor.com hasn't really been able to hold a candle to them, despite the National Association of Realtors mistakenly leasing our name to them. They haven't really been able to do that much with it, I think, to make a dent in that. Maybe this homes.com acquisition can do it, especially with the my listing, my lead philosophy. Now we have somebody, I don't know if she's here, but Glenn Baker she can flash her mic if she wants to comment on it, but she is here. And she's got a great reel about Zillow right now. So if you go to her Instagram account, you will see that. But she's been taking on Zillow full force. She's not a fan. There's some people that are a fan. There's some people that think there's room enough for both in the industry. I think there's probably room enough. Right now in our area, it's still cheap for me to buy their database by giving them some money, but eventually they're going to start cutting people out of it. So, if they cut me out of that would be terrible. But the my listing, my lead, that's an interesting strategy that maybe they will move to in the future. I don't know.
Well, that's how Zillow started until one of the CEOs left, and then it became, all right, we're a brokerage now, which we all predicted.
Yeah. Well, they have had sweetheart deals with some companies that would say it's my listing, my lead, but what that actually meant, like, for instance, I mean, Keller Williams said that they struck a deal with Zillow to be my listing, my lead. But what that actually meant was that the agent would be advertised on the listing. But when you hit the button that said contact agent, it would go to 3 randomized agents that have bought in that zip code. So it actually did not go to that agent. And so it was a facade put on by the company to make their agents think that they were getting some special treatment. They really weren't. I mean, occasionally they would get a call from a listing, but it was not the deal. Maybe they thought they had that deal, but every time you talk to a Zillow rep, they'd be like, no, that's not how it works. This is how it works.
Right. And not when you can market it your own way and you can get all the leads coming to you through your own website anyway.
Yeah. So anyway, very interesting. We'll have to kind of see what comes of it. I want to go to this next part, which is just very quick. It's a follow-up on an article that we did last week. The agency, which is a real estate agency, filed lawsuit against Compass. The suit focused on the agency's new president, Rainey Hake Austin, and her contract with Compass, where she previously worked. So in another battle that appears to center around agent recruiting, high-end Los Angeles-based brokerage, the agency accuses Compass in a lawsuit Friday of allegedly trying to prevent the agency's new president from soliciting Compass agents. So I guess they had an anti-solicitation, their agreement, and now they're saying that they want Rainey Hake Austin to be able to solicit agents against Compass. So the lawsuit focuses on a provision in Austin's contract from her time at Compass that would prohibit solicitation. So things like recruiting. Lawsuit alleges Compass reached out and tried to enforce that part of the contract in March. However, the agency doesn't believe that Austin actually broke her Compass contract, and more significantly, also believes that provisions against solicitation themselves are illegal. So that's interesting in part. For me, that's the kind of the grain that a lot of brokerages should be looking at this. If you have an anti-solicitation in your agreement with agents, is it even legal? That's the standard that could be set moving forward. And I think the most interesting.
So if you agree to something, I won't solicit when I leave. Doesn't that make it legal and binding?
Yeah, Compass.
But now they're challenging. No. She agreed, but it's not legal. You can't say that.
Compass is threatening to violate Rainey's rights by enforcing an illegal non-solicitation provision in her employment agreement.
That is aggressive.
The lawsuit is Rainey's attempt to vindicate her rights as a California employee, and the agency fully supports her efforts in doing so.
I would say recruiting has become a little more difficult than she thought. She thought she was going to pull from Compass quite a bit, and then she went, "Oh man, I can't."
I don't know. It's interesting. I've never heard it put like that. That she has a right to do this, but it's a
especially if she agreed to not do it. Like going back to my time in video game industry, we have an NDA we signed, a non-disclosure agreement. So pretty much you can't say anything about any of the video games that you're making or working on. But also, if you create anything under that umbrella, it's their property. So you have to create it under your own time and energy and company. Or Activision, who I worked for, they own it. So I find that very interesting and a little bit, hey, Compass is in the news right now. Let's go after them, and then our name will be in the headlines with them.
As a matter of fact, they put Inman put in here that, however, the company is no stranger to legal battles. Earlier this week, Howard Hanna, which we covered last week, also sued Compass. And then in January, a former Compass employee filed a class action lawsuit against the company of what he describes as bait and switch recruiting compensation tactics.
That one, I think, has some validity. That one. These other two, I don't really think so.
So I have good friends that are great agents at Compass, and I'm curious what they think about this stuff. And of course, they can't really go on record and say anything, so I would never put them in that position. But I thought it was really interesting. Unfair business practices, bait and switch, all this stuff is happening. I don't feel like my friends would participate in that, but now I want them to go check their employee agreement and see what it says.
Yeah, really read it, because people don't always read that.
Yeah, and if you are an agent at any brokerage, you need to check your employee agreement and see what it says about this kind of solicitation. What's going to happen when you leave? Are you going to be able to contact your own clients, contact your own database? Are you going to be able to export your database on your way out? What's going to happen? I think more agents need to pay attention to those agreements. But that kind of does it for the show. Dan, do you want to tell everybody where they can find you?
Well, I want to also say, it sucks for my little mixer here that I use. it sucks because it's a second generation, so it can't purchase a home. I feel bad. I was just, as I was doing the show, I look over and I'm all,
oh, second generation. No.
Well, first of all, it's Scarlett solo, fully alone, just solo on its own, and it's second generation. Like it's getting, so if you're looking to do a podcast, help Scarlett solo out because they can't buy a house. So
there you go.
Reach out to them. But if you want to find any witty banter like that, you can find me over on Instagram at dletterrocks, DLUDWIGROCKS. And please, if you're struggling right now, reach out to someone, ask for some help. And if you're not struggling, you're having a great time, reach out to someone and check on people.
Yep. And James Festini chimes in at the end. He said, Dan's feed is so grainy and the audio is really broken. I may have to wait for the podcast. Ray's feed is solid, but Dan is blurry and the audio is choppy. Anyone else? Yeah, so we're pretty sure that it's something happening on the StreamYard application. That's what we use to stream the show. And it looks like Dan's feed is good going in. He's got full Wi-Fi, so
yeah,
it should be able to produce what we normally produce. But for whatever reason, it's not working. So
yeah, I ran a systems data analysis check as Ray was talking through the stories, and well, everything's checking off. My KBS is pretty high. Sorry.
I love that producer Matt put his own comment on the show. Windows problem. All right, everybody. Thanks for joining us. You can find me at Ray Zorback. That's RayZorback on the Instagram. Would appreciate if you connect there. But thank you guys so much for joining us, and we will see y'all next time. Bye, everybody.
Bye. Go eat high. We got a game later. We're gonna kick some butt later. Bye.
Bye.
Love you.
Oh wait, I forgot to hit end on this one. I hit end on the other.